Hello, welcome to the weekly technical analysis for Monday, January 21st. I'm Rafi Bajajan, currency analyst at xm.com. The pairs we're going to look at for this week are the dollar yen, the euro dollar, and the pound yen. Starting first with dollar yen, we can see that in the near term the pair is in bullish mode. We can see from the MACD that the histogram has recovered considerably from the lows from earlier in January and increased its distance above the signal line. However, it's still got some way to go before it turns positive, and that highlights the depth of the bearish structure currently at play. And we can also see from the moving averages that the 50-day moving average is fast approaching the 200-day one, and then we could soon see a death cross in the two averages, and that would underscore the bearish structure in the medium term. In the more short term, though, although there is positive momentum, stochastics are in overbought territory, and the percentage K line is in progress of dropping below its percentage D line. So today's weakness in price could extend possibly to a deeper downside correction. First, it would have to overcome immediate support at around the 38.2% Fibonacci retracement of the down leg from 114.20 to 106.45. So that's around 109.40 and also near the 20-day moving average. So dropping below that support zone could send the pair towards the 23.6% Fibonacci at 108.28. And then lower down, the pair would be at risk of moving towards that 9-month low 106.45 that it touched at the start of January. If we were to see, though, further gains in prices, dollar yen would first have to overcome resistance at the 110 handle. Crossing above that level would take the pair towards the 50% Fibonacci at 110.33, but above that there's an important resistance level where the 200-day moving average is about to intersect the 61.8% Fibonacci at 111.24. So overcoming that resistance would strengthen the upside momentum, and then the next key level above that to watch would be 112.54, the 78.6% Fibonacci. Turning now to euro dollar, we can see that the near-term bias is neutral. RSI has flatlined just below the 50 level. Looking at the stochastics, though, they are in oversold territory, and the percentage K line is about to make a bullish crossover with the percentage D line. So we could potentially see a rebound. At the moment, though, there is prices are being supported at the bottom of the Ichimoku cloud at around 1.1355, and that's also where the ascending trend line currently passes below the price action. If we were to see a rebound, resistance would likely come at 1.1420, that's the top of the cloud, as well as where the Kijun Sen line has a flat line. So breaking above the cloud would take euro dollar to the next key resistance at 1.1490. So that's been an important resistance level several times in the past. And then above that, the pair would be able to aim for the 3-month top of 1.1540 we saw earlier in January, and then that would also help the pair resume its uptrend that started back in November. To the downside, though, if prices were to breach below the ascending trend line, focus would turn back to the 1.13 handle, and then below that, the pair would be at risk of heading back towards that 16.5 months low 1.1215 from November. Finally, looking at pound yen, the pair has lost some positive momentum over the past couple of days. RSI has fallen to just above the 50 neutral level. So there is immediate support coming from the 50% Fibonacci retracement of the down leg from 149.48 to 132.49. Breaking that support would take the pair towards the 139 level, that's the 38.2% Fibonacci, and then below that the next key support would come from the 23.6% Fibonacci and 136.50. However, if the pair was to resume its uptrend, it's likely to meet some resistance at the 50-day moving average, currently at 142.33. Clearing that hurdle would take the pair towards the 61.8% Fibonacci at 143, and then above that the focus would increasingly turn to the upside, and then the next key resistance above that would come from 145.84. That's the 78.6% Fibonacci, and that would also help shift the neutral to bearish outlook in the medium term to a more bullish one. That's it from me. Thank you very much for watching and have a great day.